time. Don't leave me here high and dry. Oh, but I don't wanna jinx it, baby. Let's not get ahead of my time. Oh, but I don't wanna miss you, baby. So I stand up and speak just my mind. Oh.
Ice and fire. I kind of expect some of that today with Jerome Powell and the Fed. And happy Wednesday to you all. How are you doing? I see chat is banging already. And for those of you curious, I was hanging out in the chat before the live goes on. Love hanging out with the chatters. Love hanging out with the viewers. And I don't know, am I going to love hanging out with Jerome Powell on the mic today? Probably not, because the dude's been a prick. But my big question to you is, what is the Fed going to give us today? We had some good news with the pumperoni action. I'm probably going to go lowercase p on that one, lowercase pumperoni. And I'm going to say we got some good news, but is the Fed going to come in and pee in our Cheerios later? I'm already seeing XRP's price pull back a little bit, which sucks, but you know what? The day is just starting. Now, what we need to see is good news from the Fed. And you're like, Klaus, will the Fed give us good news? Well, this meeting is a little bit different, all right? As you see up on the screen, you see this asterisk right next to the 18th, 19th, right? Basically, that tells us that this meeting is about summary of economic projections. So not only are they going to talk big time about rates, they're going to be talking big time about what their forward view is. And if their forward view is just giant poop sandwich, poop tacos and nothing burgers, well, I think we know what's going to happen to the crypto market. With that being said, I'm going to turn it on over to you, the viewer, because in about 10 minutes, we're going to get that announcement from the Fed, and I'm going to read it. The announcement is basically going to tell us that they're going to pause. They're going to tell us that the economy can handle rates and blah, 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 blah. But we want to know what they think about the future. Jeremiah Johnson says, we need some hot Asian market action. Actually, let me correctly say that sentence. We need some hot Asian. Thank you, Jeremiah Johnson, for helping us out. Channel members, I see you out there. BX all day to my friend Hector. That's right, BX all day. I got your back. Glenn's hanging out with us in the house right now. Just waiting for the regs. Now, after that, it'll go up, up, and up. Well done, Glenn. In terms of regs, stablecoins are going to get the regulations first, and then we'll start working on the rest of the crypto market. I am a little concerned with the regs, and it's going to take longer than we expected. Part of me is sitting here thinking, okay, stable coins will get done by June, July at the latest, like at the latest, and that's if something weird wonky happens. But May or June at the latest, we should have stablecoin regs. A few months after that, we should have what? Regs for the rest of the market. Now, let me share a little wisdom with you here. It's recently been discussed that XRP is going to be known as a commodity. And if that's the case, well, then you pay taxes on those commodities, don't you? So that kind of rules that out. But if it's ruled as a commodity, that means the CFTC would be regulating XRP, not the SEC. Which is a good thing, but it also leaves the door open to the rest of the ideas and questions of, well, then how does that benefit XRP? Just throwing it out there. Now, in terms of XRP price, we saw some pumperoni today. I don't know if it's lowercase p or uppercase p. We're kind of right in the middle right now. But we did have a nice pump from 232 up to 290. I'm sorry, 240, I can't talk today, 259 even on the high side. So that being said, is 259 the most we're going to get out of the case being over? Because if so, that sucks. Now, granted, I know a lot of us watching knew that the case was going to be tossed. We've seen like everything else out there get tossed. We've seen the exchanges, the NFT stuff. It's all gone, gone, gone. But now, what about XRP? And honestly, what about the rest of the market? The rest of the market is deep in the green. That's good. But what is it pumping on? It's pumping on SEC Ripple news. And I don't know about you, but that's kind of odd. I mean, we'll take any win we could get at this point, but the reality is XRP should be the biggest benefiter, and they are, but still not enough. Let's swing it on to your comments here. Don J says, as a commodity like metals. Trick is hanging out with us in the land of beauty. Hello, kind sir. And a bunch of you are thinking that we're going to get a crash after that. Now, the thing with commodities, the thing with securities, I think what we're going to see is we're going to see the market still hold off on getting into XRP. But I believe that it's going to open the door for them as soon as the regs come in. And I'm highlighting that because a lot of banks out there, a lot of big money players out there have been saying exactly that. Yo, we love what's going on with crypto. We love what's going on with the SEC and the Trump administration, but we're not getting into the water just yet. We want to make sure that there's actually regs. David Hunt says, we were pumping before the news anyway, so why didn't we fly up? Because the market is bought and algo traded. And what's sad about that is that, and one of y'all mentioned it earlier, is that XRP had the bigger pump to the market than did BTC. Are we going to start asking about Pokemon? I think we should start talking about Pokemon. Juicy Pokemon slabs like my Charizards and my Pikachu PSA 10s. Gotta love them. We got a few minutes until the rate announcement. We got about 5 minutes till the rate announcement. Also going to get the summary of economic projections around that time. There's going to be a lot of visuals during today's meeting, and that is going to be something that we're all going to focus on. I'm telling you right now, pay attention to the tone from Jerome Powell. Because if my guy is a straight out prick, boom, we're going to be in deep trouble. But now if he's optimistic and if he's like, yo, girlfriend, we've got a chance that we are going to get 3 rate cuts this year, well, then we're going to be doing good. But the problem is right now, the money is on 2 rate cuts this year, with a little bit more leanage to the side of only 1 rate cut. East Afro King says, sup, Klaus, sup, back to you, player. Beachhead Fred now joining the channel, super supporter, love it. Everyone give Beachhead Fred a big thank you. And by the way, anytime there's a super chat, a super thanks, a channel member that joins, please give them a big thank you for supporting the channel. The thank you, or the super chats and all the support keeps this channel sponsor free, so I don't have to worry about trying to sell you some BS. I don't have to worry about selling you a Discord group that's $20 a month or a trading platform or a trading group that we all can hang out on. I keep the content free of charge, so if you feel like supporting, awesome. I appreciate it, and so does everyone else. That's why I thank the people that support the channel. Alb says, it's all manipulative, full of bots, but I honestly thought with the news of the SEC over, we'd be at $4 or $5 right now. I honestly thought that you would get more than this. Okay, so when I looked at XRP price, this is kind of what I was looking at, okay? I looked at the most recent news of the strategic reserve with Trump. And I was like, okay, cool, that got us up to $299.9. Like, literally, we were like right there, okay? $299.9. This only got us to $259. So you're telling me that this news was only half as important? I think this was a bigger news story than the strategic reserve. Because this case has been hanging over our heads for so frickin' long. So what's bugging me about this is the initial move. And look at this, okay? Look at the move right here. All right, this is the strategic reserve move up on the screen. We had a good capital P pumperoni going on. And then look, we dumped it all. And we dumped it all within like 36 hours. Look at the move now with XRP. Kind of noticing the same pattern, aren't you? That's not too good. Dawn Ellsworth says, I think you rock, Klaus. Well, Dawn, I think you rock as well. 2 minutes until the announcement from Jerome Powell and the Fed. He's going to pause. He's going to pause. Come on. Don't think anything else. In fact, leaving rates unchanged right now is at 68%. That should be at 99%. Simone is hanging out with us today. What's up, Simone? How are you doing? Brady D says, bad Klaus. No, it's not bad Klaus. It's sore Klaus, but not bad Klaus. KJV Truth 1 is thinking what we're all thinking, and they said it. Stupid day to announce XRP news with Jerome Powell the same day. I am totally freaking with you on that. Because we get some good news, we get some awesome action, and then we get to deal with Jerome Powell and the poopy Fed. Mark Balls, love the name, says sentiment is low, like my well done. Now what I'm going to do is I'm going to keep hitting the refresh button up on the screen. Look, we know Jerome's going to pause. They're not going to lower it. They're not. If they happen to lower it, which I doubt it, holy crap, the market will frickin' roar. But it ain't going to happen. They are going to pause. Juan Love says, no pause, Klaus. It's a cut. You crazy nut. Trust me, they ain't cutting. You want to put some money on that? You want to lose some money on betting me that they're going to cut? Because I'll take that money and I'll buy more Pokemon. PSA 10s, that is. Andy Heron says, fairly new to the channel. Love what you're doing, Klaus. That's right, my job is to bring you the news, good or bad, happy or sad. That's why, I've got it in right now. Are you ready for it? Here we go. PDF. The committee seeks to achieve maximum employment and inflation. In support of these goals, the committee decided to what? Maintain the target rate. They took a pause. They paused. There you go. I'm putting it down. They paused. Like I told you the Fed would do this. Inflation is still way too high. The economy in terms of jobs is still too strong. For when the job market is strong, what happens? Jerome Powell and his friends are like, yo, girlfriend, we can handle high rates for longer. That's not good. Because that means risk assets like crypto, and be fair with me, be fair, okay? Risk assets like crypto, and crypto is super risky. That's why we're into it, right? We're into it for big gains and big risk. When things are super risky and the economy is kind of players aren't going to get into it, right? Just throwing it out there. No cut, boys, is right. That's coming from XRP World. BZ's hanging out with us from the West Coast, Best Coast, East Coast, Beast Coast, my guy. XRP price, well, let's zoom in a little bit. Let's go to the 1 minute candlestickeronis and see if we get any juice from this news. Yes, Trick is saying pause next time as well. Yeah, supposedly the first rate cut is supposed to happen in June. AGOG, love the name, says the pause was priced in, correct, but what's not priced in right now is the summary of economic projections. And you're like, Klaus, what are the summaries of economic projections? Well, I'm going to show you them right now. Here you go. You're going to see a bunch of slides, a bunch of numbers here talking about unemployment rate projections, where they think the GDP is going to be. Look at this. They're saying the GDP is going to be level here for a while. Let me put my drawing pen on, right? This is telling you that GDP is going to be drawn for a while, kind of staying sideways. Unemployment rate, they think is going to stay where it's pretty much at right now. Inflation, they think it's going to go down, but it's going to take a long time. That's not good. We want inflation to go down faster. In fact, you could see that some of these players out there are expecting even in 2026 that they're going to have 3% inflation. That is way too high for way too long. This right here, this is our dot plot, okay? This is where all the FOMC people, right, all the people that vote on this stuff, where they think rates are going to be, where they think inflation is going to be, all right? So what they're saying is 2025, the majority of these players out here are pricing in 375 to 400, 400 to 4.25. They're saying 2 rate cuts this year. Only 2 people are saying 3 rate cuts, while 4 people are saying only 1 rate cut. So you're like, Klaus, when are the big rate cuts going to come? Well, when my wife comes home, she's gonna help me out with food. But the bigger rate cuts they're talking about potentially up to 4 more is going to happen in 2026, and that's this right here. So right now it appears that the Fed is saying that we're going to pause for even longer. And right now, the word on the street is what? The word on the street is that Jerome Powell and the Fed paused rates. I got it right here. Hold on, let me put a little highlighter on here for you. There you go. They paused rates. And why did they pause rates? Because unemployment has stabilized and the labor market is solid and inflation is elevated. So, yes, we had one good CPI data report, but the 4 before it sucked ass. It's like if your kid came home and said, Mom, Dad, I just got a B+ on my test. And you're like, Timmy, that's great, but what did you get on the previous 4 tests? And Timmy's like, well, I don't want to talk about that. I just want to talk about the most recent test where I got a B+. And you're like, Timmy, open your mouth and have words come out and tell us what you got for the last 4 tests. And Timmy says, oh, I sucked on the last 4 tests. I failed them. So then as a parent, you're like, well, Timmy, I'm glad you got a B+, but your overall average sucks ass. And that's what we're dealing with right now. We had one good CPI report, but the 4 before it sucked massive ass. XRP right now, I've got the 1-minute candlestick on the screen. Let's change that out. Let's zoom that out to the 5-minute just so we could see the action here. Because today we're going to cover the action from the SEC, and we're going to cover the action from the FOMC. Maybe even Snoop DRDGOLD will hang out with us, but he's not from the OCC. So if you've got questions and if you've got comments, now is the time to bring them up. It is 2:06 p.m. Eastern Time. Jerome Powell will come on the mic at what time, everyone? 2:30 p.m. Eastern Time. At that time, guess what we're going to do? We're going to go to the FOMC meeting and see what my man JP has to say. It just sucks because guess what, man? We are going to be what? Dealing with high rates for longer, and that's not a good thing. Yeah, and in terms of the bots, for real, I cannot tell you how nuts the bots have been. I wake up, okay, so like I go to bed whenever, right? Let's just be real here. I go to bed whenever, all right? And by the time I wake up in the morning, there's bots like freaking crazy. Absolutely nuts. And it happens while I sleep. By the way, Mary Burns dropping support on the channel. Thank you very much, Mary. Everyone give him a big shout out, a big thank you for supporting the channel. The 1-minute ticker has been a 3-cent dump. Yeah, it's not looking good. In fact, we're peeling even further down. And Mary Burns, seriously, I do appreciate the support. Everyone, please give a big thank you to Mary Burns supporting the channel. Josh Fisher says, I'm real, I exist. But are you part of the simulation, my guy? Brady D says, you know, lower rates devalues the dollar. It's not about lower rates devaluing the dollar. It's about risk assets and growth sectors. Growth sectors just do amazing on low rates because money is cheaper to expand. So crypto is risky. Crypto is based on growth. Crypto right now, as a whole, we're looking at this big blob up on the screen saying, yo, how do we get crypto to 2x from here? We need something juicy. We need money to flow in, and we need some big-ass utility. You don't get big utility if rates are high, because the people that build in crypto need the money. And if rates are high, money is more expensive. So there you go. And honestly, it's so cool to see that Mary Burns is getting the thanks from other people. Thank you so much for thanking the people that support the channel. Dylan says, what's your favorite Pokemon slab that you own? Actually, it's not... Hold on, I'll grab it super fast. Hold on. It's not that it's crazy expensive, but I love the art on it. Give me a second here. Oh, I just knocked... Oh, dang it. Did you just see that? Oh, I just devalued all my slabs. They all fell down. It's this one right here. It's this Lost Origin Pikachu. This is seriously my favorite one because I love the art for it. Just thought I'd share that with you. So right now, the market is just looking, waiting for Jerome Powell, and that's what we're doing. So if you got a question, if you got a comment, put it in the chat. Simone says, completely right, the macros have to improve, and also the regulation. This will give us compounding growth instead of the chop chop. Very true, Simone. And that's why I read Simone's comments, because homegirl knows what's up. She is smart AF. You need rates to come down. You need regs, obviously, because banks are staying on the sidelines. And what else do you need? You need some real utility in the market. I think about it. Everything in crypto right now is speculation, total party foul. Luckily, the slabs are all in those nice PSA cases and it hit the carpet, so I got nice plush carpet in here, so I did pretty good. But we need some massive utility in the crypto market, or else it's just a speculative bubble, and that's not cool at all. That's not cool at all. A healthy life, the best life, says Stellar Lumens opinion. Honestly, XLM is a laggard. It doesn't pump as much with the rest of the market. There's no news that comes out of the Stellar camp that sits there that drives the market. They did the whole UNHCR thing. That did nothing. MoneyGram did nothing. They canceled their NFT platform. Lightmint's gone. I'm sure y'all have seen that. Lightmint's gone. They did their whole Soraban thing. That didn't do anything either. T-Logic says, hello from Ohio, Klaus. Well, hello back to you. It's just frustrating, though, because we get good news from Garlinghouse. And by the way, this 4-minute clip from him was freaking awesome. Was actually really, really awesome. The problem is, though, is that we got Garlinghouse good news on an FOMC day, which sucks. Totally sucks. Forgetful 47 says it's gonna drop to the low 2s again over the next week. Yeah, I mean, what's gonna drive us there? What is coming out of the crypto market that's really gonna make us roar? I mean, okay, someone brought up XRP ETFs. The ETFs I am down with, and the reason I'm down with is because they buy from the exchanges. That helps out the supply and demand dynamic. The over-the-counter buying isn't helping us out at all, and that's bullshit. For real, it is. It is total crap. So the ETFs, I'm a big fan of because it's the way we buy. They're going to be buying it from the exchanges. By the way, there's 3 ETFs that I've researched so far that said they're going to be buying from the exchanges. That's good. No nothing burgers with that. But really, what's going to come out of crypto right now that's going to get people excited about it? Everyone has done meme. Everyone's done meme launch pads. Everyone's done tokenization. Everyone's done all sorts of shit. I heard someone say, well, Pi Network's going to frickin' roar because they're doing auctions. Tons of other players have done auctions. It's done jack crap. Bro, tokenization is going to drive the price. No! Tokenization ain't gonna start doing shit either. Everyone's doing tokenization. ETH has got some tokenization. They're at 2,000. That sucks. Stellar's done tokenization. Hasn't gotten them anywhere. So yeah. Sean Wood, I'm gonna share this comment. Sean Wood says, We need all the ETFs to buy from the exchanges. If you want to see a massive pump, or it'll just be little pumps and dumps all over again. You do. You need the ETFs to buy from the exchanges. And what you really, really, really need, you need to stop all the over-the-counter stuff. Sparkwater, channel member, and thank you to all channel members out there, says, sorry to say, but probably a BTC bubble forcing widespread investing from there. Yeah, and that's what I'm worried about. I'm worried about the market being tugged by BTC, whether it's good or bad, happy or sad. Glenn says regs and ETF are pumping it. I'm with you, Glenn. Regs are going to be a big thing because that's going to pull money in from the sidelines. Big, big money. I'm talking about institutional bags. ETFs can definitely do it as well. Mike says yes, no OTC. And that's been the whole thing. So for those of you out there that don't know how OTC works, this is basically how it works, okay? Let's just pretend we're buying from Ripple and we buy over the counter. Ripple isn't selling us XRP at $2.49. They're probably selling us XRP at like $1.50, maybe $1.75. Then all we do is hold on to it for a while and then do the dumperoni. See what I'm saying? So this is a big, big problem here because a lot of these players out here have bought over the counter. And when you buy over the counter, you're buying it for less than what market value is. So that means they're already in the green profit-wise before they even do anything. Ricardo24 says, David Schwartz says XRP is worthless at a low price. It needs to be a high price to utilize properly. XRP was never designed for retail. But what does it fucking matter? Ricardo? Ripple has gone heavier into stablecoins. Ripple just announced that they're doing custody stuff. They filed a patent for it. They're making money on that. In terms of XRP needs to be higher for the price to work. No, that's not true. You have so much fucking supply out there that guess what? You just got to use more tokens, don't you? And since it settles within a few seconds, that money can go back into the coffers and be dished back out. And the result was a pause, by the way. We paused rates. You're going to see this here up on the screen, all these charts. These are their summary of economic projections over the next several years. This is all going to be what he talks about today. And what's really, really crappy about this is the fact that the majority of these players out here are saying that you're not going to get the big rate cuts until 2026. Jason Vitorino says, where else would you purchase XRP if not off an exchange? You could buy it from Ripple over the counter directly. Yeah, you can buy from them. There's plenty of players that have done that. And that's crappy. That's totally crappy. The problem is, by the way, Ripple IPO, an IPO would not benefit XRP. An IPO would benefit Ripple, the company. It would give them more capital. But why would Ripple want more capital? They have tons of XRP, and every month they sell a bunch of it to run their business and add to their coffers. You see what I mean? That's just kind of weird. Something we got to keep our minds on. XRP price right now, we're sitting right around 250. We got about 14 minutes till Jerome Powell and the Fed come on the mic. If you've got questions, if you've got juicy comments, let me know what they are down below in the chat. Yeah, in the chat. And by the way, I'm going to hang out in the chat when Jerome Powell goes on the mic. And you know the chat is awesome AF when my man speaks. So hang out with us when Jerome speaks. But overall in the market, I mean, I got to be honest with you. We need something. Oh, but bro, tokenization is going to take us to the next. No, tokenization. All these players out there have done tokenization. And what has it gotten us? Poop, 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 sandwich after another. Or poop tacos. Maybe you're tired of eating sandwiches. All these players out there were like, yo, we're going to do NFTs. And we saw that the NFT boomed and then just kind of went back down. Scott Forey says gold has stolen the spotlight. Very, very true. Gold is stealing the spotlight and taking a lot of money with it. Now, here's the thing. The reason gold is roaring is because there's so much freak out right now in the market that people are going to safe haven assets. Andre Moda says, huge love from Portugal. Klaus, love your channel, Choo Choo Bitches. I have a Choo Choo Bitches sign, by the way. I do. I have an LED sign that I need to hang up. I bought it a couple weeks ago, got delivered. I just haven't hung it up yet because I don't know where to put it on my wall. I got some slabs over there. You know what I'm saying. Ticey Griffin dropping support on the channel. Thank you very much, Ticey. Everyone give Ticey a big thank you, because any time someone supports the channel and supports all of us by keeping the channel sponsor free. Because you don't want me pumping or shilling junk onto you. You don't want to watch a video of mine and then halfway through have me go, you know, if you want to join my Discord for $20 a month so I could tell you melting faces poop on a stick. No. Ticey Griffin says, I gotta say, when I first started watching, it was like watching a rocket ship and take off. Now it's like watching ice melt. Yeah, ice melt in the winter, my guy. Thank you for the support too, by the way. Poop soup. No poop soup. I love soup. Don't ruin soup for me. Sandwiches get boring. Poop kitchen. Yeah, big thanks to Ticey out there for supporting the channel as well. And thank you to the channel members that are supporting the channel as well. Seriously. We've got almost 200 channel members right now, and I'm very appreciative. In 11 minutes, Jerome Powell is going to go on the mic, and we're going to see what he says. Tommy says, do you think any real price is going to happen until we get utility? The thing is, Tommy, what is the utility? Like, okay, we already know that you can move money for cheap, right? You can use XRP, XLM, HBAR. You can move it for fast, cheap, safe, and secure. So we already know that utility exists, but no one's using it. The majority of people that are using crypto are using it as a store of value play as loan collateral. That's it. That's not good. Not good at all. Well, bro, the utility is tokenization. Awesome. We've had tokenization for well over a year now. Is that helping out the market? No, not at all. Andre Mata dropping support on the channel as well. Some euros. Don't tell me it's euros. It's euros for those of us with Germanic blood. Says, huge love from Portugal. Love your channel, brother. Well, thank you from across the pond in Portugal. While I was in Guatemala, they had a lot of Portuguese soccer on the old telly along with España. By the way, my trip down there was freaking amazing. Zach says instead of Lambos, we're going to drive station wagons. Kind of like the ones from National Lampoon. The family truckster. Oreos. Euros. Love it. Bill Hutchins says, you are on. What really is the use case that will push this individual coin price? Bill, it's not just XRP, it's all cryptos. All cryptos are in the same boat right now. What is Solana doing that's so different than ADA, that's so different than ETH, that's going to separate them and make them pump? That's my point. We're not getting anything big at all. Marcus Schmidt says, hi all from an Euro German. Well done, Deutsches. So for real, how is this going to work? We're sitting here and we're looking at it and we're going, okay, what is Stellar doing right now that's attracting attention? Nothing. They're not doing anything new. Well, we have smart contracts. Cool as shit. So many other players have smart contracts too. Well, we have tokenization. Awesome, kid on the block. So does everyone else. That's the problem. And see, that's why I bring you the news, good or bad, happy or sad. I'm not here to give you the hopium BS. Favorite baseball slab. Wow. Okay, so I have a ton of baseball autograph rookie cards. Tons of them. I'm thinking I have a Carlton Fisk. Hold on. Here, I'll get it real quick. You'll see. Hold on a second here. Hopefully I don't knock these down. I probably shouldn't be messing with all these. But I got this. I gotta be real careful with it. Two of my favorite slabs. I got an autographed 10 out of 10 PSA Harold Baines. And I've got this gem right here. A little Carlton Fisk auto. Oh, baby, that's juicy. I love slabs, by the way. But we got more support for the channel. Let me read this one to you and make sure y'all say thank you. Riverboy says, thank you for your work. Keep it real. I do. I bring you the news, good or bad, happy or sad. Because the problem is we're being filled with a lot of hopium. Oh, all the money in the world is going to be moved on this. No, and no, it's not real. It's not true. Larry Bial says, hey, Klaus and Chad, any Portlanders in the house? Josh Fisher says, White Sox. I've got tons of White Sox autos. I got my Harold Baines. I got tons of Frank Thomas auto rookies. I got some Luis Robert rookie autos. I've got some Dylan Cease autos. Oh, I ain't letting them things go at all. And give a big thank you to the channel supporters as well, because remember, every time they support the channel, they support all of us. So make sure you give Riverboy a big thank you for supporting the channel. Now in 6 minutes, Jerome Powell's coming on the mic, and we're going to go live with that. A little bit of a building right here. But for real, what is going to bring crypto to the next level? That's the big issue about this. We saw it. Everything so far in crypto has been like a pump and a dump. When meme came out, everyone got into it, and then everyone got out of it fast. When tokenization happened, it was always, oh, tokenization, real world assets. And we saw it didn't do anything. Oh, well, we move money, cross-border payments. Cross-border my balls. It's not helping. A lot of players can make cross-border payments. And they can do it cheaply, fast, and safely. Now, once we get the regs, it's going to become more clear. You're going to then see more money flow into the market, but that money is going to be asking you the same question that I'm asking you right now. Okay, cool. Why should we invest in crypto if there's nothing new coming out of it? That's just junk. And no, the White Sox are going to suck this year. I'm thinking the Sox, 3 years in a row, are going to have 100 lost seasons. Krishna Bawandi says, Ripple, we won, sees XRP pumped to 259. Powell says, oh really? Hold my beer. Everyone give Krishna a big thank you, because that's exactly what happened. And Krishna, by the way, dropped some euros on us. Not euros, euros. So think about it. If you're a player right now that's not into crypto, let's pretend you are not into crypto and you're thinking about getting into it. What is going to tell you right now to get into crypto? Succinct Factuality dropping support on the channel, gives Succinct a big thank you as well. Says, will Jerome come out with a purple tie or blue? He's coming out purple. Guarantee you he's coming out purple. If Jerome comes out with a red tie, he'd be an absolute prick. If he comes out with the red tie, the market will melt itself down and shit. Seriously, thank you everyone for the support in the super chats. I greatly appreciate it. You're keeping the channel sponsor free so that I don't shill you bullshit. Alb says, I'm watching from England. Well, hello from my friends across the pond. But seriously, ask yourself that question. We're hanging out right now in crypto, and we're sitting here and we're like, what's going to get us to the next level? James Martinez dropping support on the channel. Thank you very much, James. Everyone give James a big thank you. Yeah, he's going to wear a purple tie today. We know that. I drive up price action. Store of value is good. I think that's a healthy play, but you need more than store of value. You need utility to help push that. Krishna is waiting for Klaus to have weird pictures with melting faces titles. Melting faces. Grown men will cry. Well, grown men need to figure out what the hell they're going to use crypto for. I mean, seriously, think about this. Where we're at right now compared to 3 years ago. Have you seen anything come out of crypto where you're like, yo, this is Jumblies in the face. This is going to change things. It's all been nothing burgers. I mean, oh, it's pathetic. Trinity AQK says, did Klaus mention Brad's message this morning? Not only did I mention the message, my good man, I did a video on it. And not only did I do a video on it, homeboy, I also what? I also put it in the description so that you can see it yourself. Ah, see, I am a good YouTuber out there. But we need something, man. Oh yeah, you need 100 XRP by tomorrow. No, my favorite is like the ones that are like XRP $10,000 by Friday, and it's like Thursday night at like 11 p.m. and it's at like $2.30. We're like, oh my god. But we do, man. Yeah, Daniel C., I get it. Real utility hasn't. But what is the utility? Like, everyone knows that you can move money cheaply with crypto. Everyone knows that you can tokenize shit. Everyone knows all this stuff. So where does the juice come from? So I guess that's why I'm looking at this whole thing and I'm like, you know what? We need something big. Something real. Something where, like, everyone is going to want to use it and get in on it. Miriam's hanging out with us, says, he was at the Crypto Summit. He was interviewed. Did you see that one? Yes, I did. I did see that one. Thank you so much. Edwin dropping some euros on the channel. Edwin says XRP is done. I'm not selling one coin, but keep them as a collector's item, and ETF will not even move the price. ETFs bought through the exchanges will help. I guarantee you that will help. OTC buying is where everyone gets bent over and screwed. So yeah, what are we gonna do? We need something big to come out of crypto. We need something new. And seriously, thank you everyone for supporting the channel with the supers. It means a lot. It really, really means a lot. If you're not cool with money towards the channel, help me out with a thumbs up or a share, something like that. Right? Share it to someone out there that you know is into crypto that watches Maxi's channels. Because Maxi channels are going to get you washed. You will get destroyed. Davian Funderburg says RLUSD. RLUSD will help out Ripple and the private shareholders. Not so much XRP. And in fact, here's the whole thing. RLUSD has been out and it's not driving up the price. Oh, JP is on.
Inflation has moved closer to our 2% longer run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We also made the technical decision to slow the pace of decline in the size of our balance sheet. I'll have more to say about these decisions after briefly reviewing economic developments. Economic activity continued to expand at a solid pace in the fourth quarter of last year, with GDP rising at 2.3%. Recent indications, however, point to a moderation in consumer spending following the rapid growth seen over the second half of 2024. Surveys of households and businesses point to heightened uncertainty about the economic outlook. It remains to be seen how these developments might affect future spending and investment. In our summary of economic projections, the median participant projects GDP to rise 1.7% this year, somewhat lower than projected in December, and to rise a bit below 2% over the next 2 years. In the labor market, conditions remain solid. Payroll job gains averaged 200,000 per month over the past 3 months. The unemployment rate at 4.1% remains low and is held in a narrow range for the past year. The jobs to workers gap has held steady for several months. Wages are growing faster than inflation and at a more sustainable pace than earlier in the pandemic recovery. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year and 4.3% over the next 2 years. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 2.8%. Some near-term measures of inflation expectations have recently moved up. We see this in both market and survey-based measures, and survey respondents, both consumers and businesses, are mentioning tariffs as a driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.7% this year and 2.2% next year, a little higher than projected in December. In 2027, the median projection is at our 2% objective. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. Looking ahead, the new administration is in the process of implementing significant policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. It is the net effect of these policy changes that will matter for the economy and for the path of monetary policy. While there have been recent developments in some of these areas, especially trade policy, uncertainty around the changes and their effects on the economic outlook is high. As we parse the incoming information, we're focused on separating the signal from the noise as the outlook evolves. As we say in our statement, in considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We do not need to be in a hurry to adjust our policy stance, and we are well positioned to wait for greater clarity. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. An admittedly challenging exercise at this time in light of considerable uncertainty. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of this year and 3.4% at the end of next year, unchanged from December. While these individual forecasts are always subject to uncertainty, as I noted, uncertainty today is unusually elevated. And of course, these projections are not a committee plan or a decision. Policy is not on a preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Our current policy stance is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. At today's meeting, we also decided to slow the pace of decline in our balance sheet. Since we began balance sheet runoff, our securities holdings have declined by more than $2 trillion. While market indicators continue to suggest that the quantity of reserves remains abundant, we have seen some signs of increased tightness in money markets. Beginning in April, the monthly cap on Treasury redemptions will be lowered from $25 billion to $5 billion. Consistent with the committee's intention to hold primarily Treasury securities in the longer run, we are leaving the cap on agency securities unchanged. This action has no implications for our intended stance of monetary policy and should not affect the size of our balance sheet over the medium term. The committee also continued its discussions as part of our 5-year review of our monetary policy framework. At this meeting, we focused on labor market dynamics and our maximum employment goal. As we have indicated, our review will include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I will look forward to your questions.
Howard. Howard Schneider with Reuters. Thanks for your time. So two things on sort of the real side here, inflation and then GDP. How much of the higher inflation forecast for this year is due to tariffs? And since the policy path remains the same, are you effectively reading this as a one-time price level shock?
Okay, so how much of it is tariff? So let me say that it is going to be very difficult to have a precise assessment of how much of inflation is coming from tariffs and from other, and that's already the case. You may have seen that goods inflation moved up pretty significantly in the first 2 months of the year. Trying to track that back to actual tariff increases, given what was tariffed and what was not, very, very challenging. So some of it, the answer is clearly some of it. A good part of it is coming from tariffs, but we'll be working, and so will other forecasters, to try to find the best possible way to separate non-tariff inflation from tariff inflation. In terms of your sort of looking through question, too soon to say about that. As I've mentioned, it can be the case that it's appropriate sometimes to look through inflation if it's going to go away quickly without action by us, if it's transitory, and that can be the case in the case of tariff inflation. I think that would depend on the tariff inflation moving through fairly quickly, and it would depend critically as well on inflation expectations being well anchored, longer-term inflation expectations being well anchored.
Well, I guess I'm looking at the out years here, and the fact that the policy path doesn't change at all, and inflation is unchanged in the out years also. Doesn't that imply you all have basically decided that there is no signal here, and that it's just we're back to transitory again?
So I think that's kind of the base case, but as I said, we really can't know that. We're going to have to see how things actually work out. And the fact that there wasn't much change, I think that's partly because you see weaker growth but higher inflation. They kind of offset, and also, frankly, a little bit of inertia when it comes to changing something in this highly uncertain environment. I think there is a level of inertia where you just say, maybe I'll stay where I am.
Colby. Thank you. Colby Smith with the New York Times. You just described inflation expectations as well anchored, but has your confidence in that assessment changed at all, given the increase in certain measures and the high degree of uncertainty expressed by businesses, households, and forecasters?
So on inflation expectations, of course, we do monitor inflation expectations very, very carefully, basically every source we can find, and short-term, long-term, households, businesses, forecasters, market-based. And I think the picture broadly is this. You do see increases widely in short-term inflation expectations, and people who fill out surveys and answer questionnaires are pointing to tariffs about that. If you look in the survey world, if you look a little further out, you really don't see much in the way of an increase. Longer-term inflation expectations are mostly well anchored. If you look at the New York, for example, then you have market-based, and it's the same pattern. People in markets are pricing in break-evens. Some higher inflation over the next year must be related to tariffs. We know from the surveys, but if you look out 5 years or the 5-year forward, you'll see that break-evens are either flat or actually slightly down in the case of the longer-term one. So we look at that, and we will be watching all of it very, very carefully. We do not take anything for granted. It's at the very heart of our framework, anchored inflation expectations, but that's what you see right now.
And how much weight do you put on the deterioration in consumer confidence surveys? You said recently that this is perhaps not the best indication of future spending, but I'm curious, what you think is behind this deterioration, and to what extent it could be a leading indicator for hard data.
So let's start with the hard data. We do see pretty solid hard data still. So growth looks like it's maybe moderating a bit, consumer spending moderating a bit, but still at a solid pace. Unemployment's 4.1%. Job creation most recently has been at a healthy level. Inflation has started to move up now, we think partly in response to tariffs, and there may be a delay in further progress over the course of this year. So that's the hard data. Overall, it's a solid picture. The survey data, both household and businesses, show significant rise in uncertainty and significant concerns about downside risks. So how do we think about that? And that is the question. As I mentioned the other day, as you pointed out, the relationship between survey data and actual economic activity hasn't been very tight. There have been plenty of times where people are saying very downbeat things about the economy and then going out and buying a new car. But we don't know that will be the case here. We will be watching very carefully for signs of weakness in the real data. Of course we will. But given where we are, we think our policy's in a good place to react to what comes, and we think that the right thing to do is to wait here for greater clarity about what the economy is doing.
Nick Timmeros, The Wall Street Journal. Chair Powell, Chair Greenspan once defined price stability as an environment in which inflation is so low and stable over time that it doesn't materially enter into the decisions of households and firms.
Can you say that today, that we have that price stability, that households and businesses are ignoring price growth? When you see buy in advance psychology, big changes in inventories, and surveys that show consumers, at least in the short run, expect higher inflation.
So I do like that definition a lot. In fact, I used it at the recent conference where I spoke. So I think a world where people can make their daily economic decisions in businesses and they're not having to think about the possibility of significantly high inflation. We know inflation will bounce around. That is price stability. I think we were getting closer and closer to that. I wouldn't say we were at that. Inflation was running around 2.5% for some time. I do think with the arrival of the tariff inflation, further progress may be delayed. The SEP doesn't really show further downward progress on inflation this year, and that's really due to the tariffs coming in. So delayed, but if you look at our forecasts, we do see ourselves getting back into the low twos in 26 and then down to 2 by 27, of course, highly uncertain. So I see progress having been made toward that, and then progress in the future. I think that progress is probably delayed for the time being.
If that's the case, why are there cuts in the SEP for 2025?
So again, people wrote down 2 cuts the last time, and they look at they wrote down meaningful decline in growth from 2.1 to 1.7 in 2025, a tick up in the unemployment rate, so not much there, but core inflation up by 0.3, and so those kind of balance each other out. So people, not everybody, but on balance, people wrote down similar numbers. The changes aren't that big. The other factor, though, as I mentioned, is just really high uncertainty. What would you write down? I mean, it's really hard to know how this is going to work out. And again, we think our policy's in a good place. We think it's a good place where we can move in the direction where we need to. But in the meantime, it's really appropriate to wait for further clarity. And of course, the costs of doing that, given that the economy is still solid, are very low.
Edward.
Thank you, Mr. Chairman. Edward Lawrence with Fox Business. So with near 4% unemployment rate, that should be low enough to bring people in from the sidelines in terms of hiring. But we're seeing the hiring rates have been stuck at 2023, 2024 levels. So what's going on there?
Yeah, so that's a feature has been for some time a feature of this labor market. You have pretty high participation accounting for aging. You've got wages that are consistent with 2% inflation, assuming that we're going to keep getting relatively high productivity. We've got unemployment, pretty close to its natural level. But the hiring rate is quite low, but so is the layoff rate. So you look at initial claims or layoffs, so you're not seeing people losing their jobs, but you're seeing that people who don't have a job having to wait longer and longer. And the question is, which way does that break? If we were to see a meaningful increase in layoffs, then that would probably translate fairly quickly into unemployment, because people are, it's not a big hiring market. We've been watching that, and it's just not in the data. It hasn't happened. What we've had is a low firing, low hiring situation, and it seems to be in balance now for for the last 6, 7, 8 months. That's where we are. There's healthy levels of job creation, too. So overall, it's a labor market that's in balance, and we watch it very carefully.
So then, have we seen the new administration's policies in the economic numbers yet? And when do you anticipate that happening?
In labor or in other?
In labor and inflation, just across the economy, have we started to see the new policies take effect in the numbers?
Only in a kind of an early way. I mean, it's only been a few months, right? For example, the layoffs that are happening here are, they're certainly meaningful to the people involved, and they may be meaningful to a particular neighborhood or region or area, but at the national level, they're not significant yet. But we don't know. We don't know how far that will go. We'll find out much more. I mentioned that you saw we've had two very strong goods inflation readings in the last 2 months, which is very unexpected. I think hard to trace it to specific tariffs, but it must have something to do with, it's either noise and it'll come back, and that's very possible too. But if it is persistent, then it must be to do with people buying ahead of tariffs or raising prices ahead of tariffs and things like that. Those kinds of things happen, and they're very, very hard to capture. Because so much of it is indirect. A great example is their washing machines were tariffed in the last round of tariffs, and prices went up. But prices also went up on dryers, which were not tariffed. So the manufacturers they just kind of followed the crowd and raised it. So things happen very indirectly. And so there'll be a lot of work done in coming months to try to trace all that through. But ultimately, though, it's too soon to be seeing significant effects in economic data.
Craig Torres from Bloomberg News. Thanks, Chair Powell. You said transitory price increases from tariffs are the base case. Transitory is the base case. Wasn't it the base case last time? And didn't the FOMC forecast lower inflation ahead last time? And wasn't the lesson that it quickly got into services, haircuts, daycare, everything else? And so I'm just wondering why the 9 aren't taking that on board and are cutting twice this year.
When you say last time, are you talking about the last?
Pandemic, yes, during the pandemic.
You could have been talking about the last time there were tariffs, in which case the inflation was transitory. Yeah, no, of course, we're well aware of that. And, it's still the truth. If there's an inflationary impulse that's going to go away on its own, it's not the right policy to tighten policy, because by the time you have your effect, you're in effect by design, you are lowering economic activity and employment. And if that's not necessary, you don't want to do it. In real time, as we know, it's hard to make that judgment. And we're well aware, of what happened, obviously, with the pandemic inflation. But I mean, we have to look at this as a different situation. There are differences and similarities. I mean, it's a different time. We haven't had real price stability fully reestablished yet, and we have to keep that in mind. And we hear that people are very reluctant to take on to allow prices to go up. At the same time, we hear that businesses are intending to pass many of these prices through. So it's hard to say how this is going to work out.
Steve Leisman, CNBC. Thanks for taking my question, Mr. Chairman. The Bank of Canada, in its last policy statement, said monetary policy cannot offset the impacts of a trade war. What it can and must do is ensure that higher prices do not lead to ongoing inflation. I wonder if that kind of reflects your own sense of prioritization faced with higher prices and weaker growth, that the idea is you have to take care of inflation.
So we have two goals, right? We have maximum employment and price stability, and we have to balance those. And, there can be situations in which they're in tension, right? And we actually have a provision in our consensus statement that says what we should do in that case. That's a very challenging, situation for any central bank, and certainly for us. And so what we say that we'll do is we'll look how far each of those two goals is, each of those two measures is from its goal. And then we'll ask how long we think it might take to get back to the goal for each of them, and we'll make a judgment, because our tools work in one direction. We're either tightening or loosening. So it's a very challenging situation. Let me say, we don't have that situation right now. That's not where the economy is at all. It's also not where the forecast is. I don't know any mainstream forecast that really shows significant problems like that. So
Well, just to follow up, yesterday, the UCLA Anderson forecast said there's high probability of a recession. Where do you stand on whether or not the slowdown you're seeing creates a higher probability or concern that you may have on recession? Thank you.
You know, there's always an unconditional possibility of a recession. It might be broadly in the range of 1 in 4 at any time. If you look back through the years, there could be within 12 months a 1 in 4 chance of a recession. So the question is whether that, whether this current situation, those possibilities are elevated. I will say this. We don't make such a forecast. If you look at outside forecasts, forecasters have generally raised, a number of them have raised their possibility of a recession somewhat, but still at relatively moderate levels, you know, still in the region of the traditional, because they were extremely low. If you go back 2 months, people were saying that the likelihood of a recession was extremely low. So has moved up, but it's not high.
Chris.
Hi, thank you. Chris Rugaber at Associated Press. As you know, I guess last night, President Trump fired 2 members of the Federal Trade Commission, an independent agency, and this could cause the kind of legal fight about the administration's power to fire independent people. If those firings stand, is that a threat to the Fed's independence? Could he do the same thing to the Fed board?
So I think I did answer that question in this very room some time ago, and I no desire to change that answer and have nothing new for you on that today.
Well, maybe I'll have another mulligan. As you know, I wanted to go back to the consumer sentiment, particularly the inflation expectations in the University of Michigan survey. In the summer of 2022, you cited the rise in the long-term inflation expectations in that index as the reason that you went big with a 3/4 point hike. So I know you've talked about all the different measures now, but you seem to not be placing the same weight on that. And so I'm just wondering, are you dismissing that, what we saw last week from the University of Michigan, or does that carry the same weight as it did in the past?
So I mentioned it back then, but in no way did I place a huge weight on it. I think that was a ex post story, but it wasn't the case. That was a preliminary reading, and so is this. And it's also, this is that Michigan, the one you're referring to, the longer term thing. You know, we look at it, we don't dismiss data that we don't like, we force ourselves to look at it, but it is an outlier compared to market-based and compared to other survey-based assessments of longer run inflation expectations. So we got to keep that in mind. And I would just say we look at all of them, and that one's kind of an outlier, but you know, nonetheless, we take notice of it.
Thank you.
Michael McKee from Bloomberg Radio and Television. There's a worry on Wall Street that when you say you want to study the net effect of the fiscal policies we may see on the economy, that you would end up waiting too long and be behind the curve in responding to any downturn. How can you reassure people that you can spot a problem early enough unless you decide to be preemptive?
Yeah, look, we're aware of we're well aware of how things are going to evolve and the timeframes and all that. And you know, we will use our tools to foster achievement of our goals to the best we can. And of course, we're going to try to be timely with that. For right now, the hard data are pretty solid. We are obviously aware of the soft sentiment data and high uncertainty, and we're watching that carefully, and we think it's a good time for us to wait for further clarity before we consider adjusting our policy stance.
Do you think it's going to be hard to get clarity in a government by tweet? I mean, do you have a feeling that at some point you actually will have a forecast you can trust?
Yes, I think we will. It's hard to say when that will be. You know, these decisions are going to be made, and they're going to be implemented, and then we'll know. At that point, we'll know what the decisions are, and we'll have to make assessments then about the implications for the economy. Those things will happen. A lot of them will happen over the course of, in coming months, certainly over the course of this year, and we'll be adapting as we go.
Rachel.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thank you for taking our questions.
At the beginning, you were talking about separating the signal from the noise and tariff inflation from non-tariff inflation. Can you walk us through what that looked like over the last couple of months, if there were specifics from the January meeting to now that helped you make those distinctions?
So when we say separating the signal from the noise, that's just a way of saying that things are highly uncertain and that you're reading about developments. The news is full of developments of tariffs being put on and taken off and things like that. Some of that is noise in the sense that it's not really telling you anything. You're trying to extract a signal from that, and the signal is what's going to be the effect on economic activity, on inflation, on employment, and all those things. So that's really when we say signal and noise. Sorry, the second thing was?
Or similarly for tariff inflation, non-tariff inflation, ways that you're making the distinction.
That's sort of a special case of that. With the idea being, and I do think that the first 2 months of this year are a great example. You've got high readings for goods inflation after a string of readings that average close to zero, and you have to ask, it's coming during tariffs, but you can't. It's very hard to actually scientifically go back and match up those increases and say, yes, I can prove that that's from tariffs, but it kind of has to be to some extent. Plus noise. There can be idiosyncratic readings in various categories which will shortly reverse, and that happens too, and that could be a big piece of it. I think we'll know. In a couple of months, we'll know whether those were, where that really was from. But that's another case where I think it's going to be very, very challenging to unpack the inflation that we see over the course of this year and be able to say with confidence how much of that came from inflation and how much of it, from tariffs and how much of it didn't. But that's what we'll be doing. And we'll be doing that, and so will everybody else, and we'll all be trying very hard to make that assessment. And, I'm sure we will make a lot of progress on that, and we already have. But it's going to be a challenge.
Do you have a sense yet as to what, in your mind, would make something cross from noise to a signal, what that threshold would look like?
It would depend on what we're talking about. I mean, obviously, you're looking for direct evidence that particular pieces of inflation are or are clearly not caused by tariffs. For example, if it's something that was, in the service sector that was far away from anything that's tariffed, you might think, okay, well, that is, like, frankly, housing services inflation, which, by the way, has been behaving well, which for some time was kind of our problem. Now it's slow, but it's definitely, moving down in a very good way. It's more now with goods and to some extent with non-housing services inflation.
Kelly. Thanks for taking our questions, Chair Powell. Kelly O'Grady, CBS News. So consumer sentiment has dipped dramatically, but you say the economy and the hard data is still solid. What is your message to consumers that clearly disagree and don't feel that strength? Because the hard data they're looking at is their grocery bill.
Okay, so a couple things. The grocery bill is about past inflation, really. There was inflation in 21, 2, and 3, and prices went up. The current level, it's not the change in prices. It's they're unhappy, and they're not wrong to be unhappy that prices went up quite a bit, and they're paying a lot for those things. So I think that is the fundamental fact, and has been for a long time, a couple of years, why people are unhappy with the economy. It's not that the economy is not growing. It's not that inflation is really high. It's not that unemployment is high. It's none of those things. We have, 4.1% unemployment. We've got 2% growth, and it's a pretty good economy. But people are unhappy because of the price level, and we completely understand and accept that.
And just to follow up, why are you still projecting 2 rate cuts this year if your own projections show inflation higher for longer? Does that mean you see a slowdown in economic growth as a real threat?
So I think remember we came into this with, at the December meeting, the median was 2 cuts, the median was. And so you come in and you see, broadly speaking, weaker growth but higher inflation. And they kind of balance each other out. So you think, and unemployment is there's really only a 1/10 change. So there's just not a big change in the forecast. There really isn't. Modest, meaningfully higher growth and meaningfully higher inflation, which call for different responses, right? So they cancel each other out, and people just said, okay, I'm going to stay here. But the second factor is it's so highly uncertain. Is just, we're sitting here thinking, and we obviously are in touch with businesses and households all over the country. We have an extraordinary network of contacts that come in through the reserve banks and put in the beige book, and also through contacts at the board. And we get all that, and we do understand that sentiment has fallen off pretty sharply, but economic activity has not yet. And so we're watching carefully. So I would tell people that the economy seems to be healthy. We understand that sentiment is quite negative at this time, and that probably has to do with turmoil at the beginning of an administration that's making big changes in areas of policy, and that's probably part of it. I do think the underlying unhappiness people have about the economy, though, is more about the price level.
Victoria.
Hi, Victoria Guido with Politico. I wanted to ask, first of all, if you could clarify, you were talking about how tariffs were a good part of the uptick in the inflation forecast, and I was just wondering what that specifically refers to. Is that the tariffs that have already been put in place? Is that anticipating some of the tariffs that might be coming on April 2nd? And then also, if you wouldn't mind, talking a little more about the balance sheet decision and what drove that. Did that have anything to do with expectations of how the debt ceiling, raising the debt ceiling, might affect the reserve supply?
Yeah, so in the SEP, you'll see that there's not further progress on core inflation this year. We're kind of flatlining, going sideways. We don't ask people to write down how much of this is from tariffs and how much of it is not, but some of it is from tariffs. We know that tariffs are coming in. We know that they're probably already, all forecasters have tariff inflation affecting core PCE inflation, core CPI inflation this year, without exception. I'm not aware of an exception. So it's in there. I can't tell you how much of that it is. In terms of the balance sheet, so yeah, I think, I guess the way I'd say it is, it was the flows in and out of the TGA that got us thinking about it. But as we thought about it, we really came to the view that this was a good time to make the move that we made. And broadly, committee that came around to the view that we would do the same thing we'd already done, which is I guess in June, was it June, whenever it was, we lowered the pace of QT, and we're just going to do that again. We're going to cut it roughly in half. And the sense of that is, if you're cutting the pace of QT roughly in half, then the runway is probably doubled. Okay, so it's going to be slower for longer. And people really like that. People thought that's a good idea. It's like a plane. You can think of it like a plane coming in for a landing. As we get closer, and by the way, we still think that reserves are abundant, although you begin to see some of the things we look at begin to react a little bit, but we still think that they're abundant. And of course, now the TGA is emptying out, so reserves are higher now, so you can't really see the underlying signal. So we came around to the view, and it had a lot of appeal, and so we did it. It has no implications at all for monetary policy. It has no implications at all for the ultimate size of the balance sheet. It isn't sending a signal in any hidden way that you can try to tease out. It's just not there. We're basically, it's very consistent with our plans and our practices that we've published and that we've followed since we began this, what is a very successful rundown of the balance sheet. Again, the second time that we've slowed the pace, and we've said that we would stop when we were somewhat above the level we judge as ample. And clearly we're not at that level yet, but we're going to be approaching it more slowly. It's a common sense kind of a thing, and it had pretty broad appeal, I will say.
Claire.
Claire Jones, Financial Times. You said in January, Chair Powell, that inflation expectations remained well anchored. Would you still say they remain well anchored today? And just to reiterate the question others have asked, if they're not so well anchored, why hasn't there been a more radical shift to the policy path today? Thank you.
So when we talk about inflation expectations being well anchored, we're talking about longer run inflation expectations. And they really haven't moved much, I mean, if at all. There's one reading that everyone's focusing on that it's higher, but the other survey readings and the market-based readings all show relatively, well-anchored inflation expectations. You would expect that expectations of inflation over the course of a year would move around because conditions change. And in this case, we have tariffs coming in. We don't know how big, what speed. There's so many things we don't know, but we kind of know there are going to be tariffs, and they tend to bring growth down. They tend to bring inflation up in the first instance. So I would say, I'm not dismissing what we're seeing in short-term inflation expectations. We, as I mentioned, follow that very carefully. But when we say expectations are well anchored, we're really looking at longer terms, 5-year and out, and there's really no story to tell 5 years and out, either in market-based or in surveys. But we'll watch it. I mean, we're not we're not going to miss any evidence that longer term or medium term inflation expectations are moving.
Neil. Hi, Chair Powell. Neil Irwin with Axios. Treasury Secretary Bessent has observed that a large share of job growth over the last couple of years has been in what he calls government or government-adjacent sectors, healthcare, education. Do you agree that there's some weakness in underlying private job growth, and do you see the composition of job growth as something that has policy implications?
So that has been the case. We talked about that over the course of the last year. There were some good number of months and times when a lot of the job creation was concentrated in, educational institutions, healthcare, state governments, things like that. There were also times when private sector job growth has been moving in a healthy range. I mean, they're all jobs, but and remember, we're at very low unemployment for quite a time now. So I think it's a good labor market, but it's something that we monitor carefully. From our standpoint, employment is employment. But the elected government is entitled to have, we don't have policies that address different kinds of employment, but the elected government has a different role, and they can have those.
Can I do a quick QT question? Does the committee envision at some point tapering the MBS runoff as well?
I think tapering it, I don't know. There's no plan to do that. At a certain point, we'll stop runoff. And we may or may not stop MBS runoff, though, because, we want to stop runoff in net at some point. We haven't made any decisions about that. We want the MBS to roll off our balance sheet. We really strongly desire that. So, but we haven't made any decisions about that. I think we'd look carefully at letting that keep going, but hold the overall size of the balance sheet in, constant at some point, a point that we're not out yet.
Simon.
Simon Rabinovich with The Economist. Thank you, Chair Powell. Several times today you've said that you feel you're well positioned to wait for greater clarity. At the same time, you could point to quite a few growth risks at the moment. We've seen a stock market that's gone quite wobbly, rapidly cooling housing sales, plunge in confidence surveys. Today, not only did the S&P mark down the growth outlook, 17 of 19 see risks to the downside. So my question is, how confident are you that you're well positioned, or is that one more thing that you're uncertain about?
I'm confident that we're well positioned in the sense that we're well positioned to move in the direction we'll need to move. I don't know anyone who has a lot of confidence in their forecast. I mean, the point is we are at, we're at a place where we can cut, or we can hold what is clearly a restrictive stance of policy, and that's what I mean. I think that's well positioned. Forecasting right now, forecasting is always very, very hard, and in the current situation, I just think uncertainty is remarkably high.
And sorry, standing here today, would you be surprised to pivot back towards rate cuts in May?
I think we're not going to be in any hurry to move, and as I mentioned, I think we're well positioned to wait for further clarity, and not in any hurry.
Matt.
Matt Egan with CNN. Thank you, Chair Powell. The Fed statement released today removed a line that previously said the committee judges that the risks to achieving its employment and inflation goals are roughly in balance. Can you explain the decision to remove that line? Does it mean that you're now more concerned about inflation or about employment?
Actually, it does not mean either of those things. Sometimes with language, it lives its useful life, and then we take it off, and that was the case here. There's really not meant to be any signal here. Over the past year, conveying the sense of the balance of risks was important, that they be in balance or close to being in balance. That was useful as we approached liftoff, if you remember, but we're past that. I'm sorry, no, beginning to cut. So we just took it out. I actually would say that the more important thing now about risks, and this is in the pages like 10, 11, 12 of the SEP, if you look, participants widely raised their estimate of the risks to of uncertainty, but also of the risks to growth and our employment and inflation mandates. That's a more salient point now than whether they're in balance.
Just on the stock market has obviously declined significantly since the Fed last met. Are you concerned at all about some of the market volatility having a real economic impact in terms of hurting business spending or consumer spending, especially among higher income households?
So financial conditions matter to us because, financial conditions are the main channel to the real economy through which our policy has its effects. So they're important. But what matters from a Fed standpoint for the macro economy is material changes to overall financial conditions that are persistent, that last for a while, long enough to actually affect economic activity. So that's what we're looking for. I'm not going to opine on the appropriate level of any market, equity, debt, commodities, or anything like that. And I would just point you to the bigger picture again. The real economy, the hard data, are still in reasonably good shape. It's the soft data, it's the surveys that are showing, significant concerns, downside risks, and those kind of things. We don't dismiss that. We're watching it carefully, but we don't want to get ahead of that. We want to focus on the hard data. If that's going to affect the hard data, we should know it very quickly, and of course we'll understand that. But you don't see that yet.
Jennifer. Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. As you look to navigate higher inflation and lower growth, the Fed has talked about heeding the lessons from the 1970s. Is the Fed willing to have a recession if it means breaking the back of inflation?
Well, fortunately, we're in a situation where we have seen inflation move down from higher levels to pretty close to 2%. While the unemployment rate has remained very consistent with full employment, 4.1%. So we now have inflation coming in from an exogenous source, but the underlying inflationary picture before that was, basically 2.5% inflation, I would say, and 2% growth and 4% unemployment. So that's what we did. That's what together the economy accomplished. So I don't see any reason to think that we're looking at a replay of the 70s or anything like that. Inflation, underlying inflation is still running in the 2s with probably a little bit of a pickup associated with tariffs. So I don't think we're facing, I wouldn't say we're in a situation that's remotely comparable to that.
And last month, the idea of a Doge dividend was proposed, which would send $5,000 checks to every taxpayer from Doge savings. President Trump and Elon Musk have supported this. There's reports there could be a bill introduced on Capitol Hill. What impact might that have on household savings and spending in terms of your growth and outlook for inflation?
It's not appropriate for me to speculate on political ideas or fiscal policy for that matter, so I'm gonna pass on that one. Thank you.
Daniel.
Hi, Chair Powell. Daniel Avis from Agence France Presse. You mentioned that tariffs are already having at least some impact on inflation. I'm just wondering how you and your colleagues on the FOMC have been thinking about the possibility of retaliatory tariffs from other countries, especially with April the 2nd coming up. Was it something you considered during this meeting? Thanks.
So since the very beginning, we've had kind of a placeholder. The staff has a placeholder of a range of possible outcomes from tariffs and from trade policy generally, and they generally assume full retaliation in those, and so that's kind of baked into the numbers. What happens? It will be complicated, and there will be some retaliation and some not, and all that. But ultimately, they're trying to, with the placeholder, give us a broad sense of what this might look like. When we actually know the specifics, we'll be able to have still uncertain, but better informed forecasts. So yes, that's in there.
Last question goes to Jean.
Hi, Chair Powell. Jean Young with MNI Market News. Had a couple questions on the balance sheet change that you made. So the minutes had initially described your discussion on slowing QT as temporary until the debt ceiling is resolved. But from what you said earlier, it doesn't sound like there's a desire to kind of regain the pace of QT that we have at the moment after the debt ceiling is resolved. Is that the case?
Yeah, so we looked at pausing and we looked at slowing, and really people came together very strongly behind slowing, not pausing, for a variety of reasons. And so people really came to be, pretty strongly in favor of this move. It slows down the path and probably lengthens it, doubles it effectively by slowing by half. That people thought that's a good place to be. It'll help us assure that this path is a smooth one as we get closer and closer to that. So that's how that came about.
Well, I guess my question is more, was that meant to be a temporary measure during the debt ceiling episode, or?
It was the TGA flows, Treasury General Account flows, that got us thinking about this. But the more we thought about it, we came around to this. And it is, yes, it was provoked. The original discussion was provoked by that. But I think what we came up with, though, was broader than that and different than that. It does address that issue, but it really is also, it fits in really nicely with our principles and our plans and the things we've done before and the things we said we would do. So that's why, pretty strong support. I just say it's nothing to do with monetary policy, nothing to do with the size of the balance sheet. It's just kind of a common sense adjustment as you get closer and closer. Let's slow down a little bit again, and that way we'll be more and more confident that we're getting where we need to get. You can take our time getting there. We're shrinking the balance sheet every month, and we think it was a good play, and as I mentioned, well supported. Thanks very much.
We love Japanese cheerleaders. Yeah, just don't. That was one of the comments. What do you want me to say? All right. Here's the deal, and Scott, thank you for the support of the channel. I greatly appreciate it. Basically, what's happening here is Jerome Powell and the Fed are not taking any responsibility for anything. They're blaming tariffs that aren't even taking effect yet. They're blaming responses of tariffs, of previous tariffs, and of parallel items which have gone. I mean, like, what? Like, come on, dude. Essentially what came out of this was Jerome Powell said, look, we're going to keep things where they are for a while. And that's not good. That's called sitting on the fence. And the problem with sitting on the fence is what? It hurts your butt because you're not picking anything. And what really, really, really sucks about this is he was hinting at prices being higher for longer and the economy, the job market specifically, being strong enough to tolerate high rates for longer. That really sucks. Because for crypto to grow, you really need rates to come down. Because you're not going to have that much extra money if eggs are still expensive, if washers and dryers are still expensive, and if homes are expensive. Tyler Yetzer says, did he say anything about tariffs? Tariffs were not mentioned in this at all. Tariffs were big. You didn't even know, never even know they existed in this meeting. Someone said in the comments right before I came back on the mic, someone said in the comments that at least we had the good news with Ripple in the SEC today, or else we'd be in the red. I 100% agree with you on that. I think if we would not have gotten the SEC Ripple news, we would be in the red right now. And in fact, as I was watching this, I was like, all right, cool, let's look at some XRP price-a-roni. And we're seeing it right now. I mean, I don't know, are you excited with 250? I mean, are you excited with 250 XRP when we just found out that the SEC is dropping their side of the case? Like, does that really do it for you? Does that make you randy? Does that make you feel all hot? I don't know. It just seems like it's lacking the oomph. It's lacking the. Now, I'm not saying that, oh man, the case is over, we're double digits, Jumbly's in the face and Wang's a swinging for the ladies. No, I'm not one of those YouTubers. But it's like, 250, that's it. I mean, I guess like, yeah, I know, it's better than $2.30, Tyler, I do get that. But like, that's it. I mean, it's just, I don't know. And okay, here, check this out. Overall volume for the market, right, is up 16%. XRP's volume is up 154%. So you see what I'm saying? Like the overall market is just kind of blah. And if inflation is high and we're all paying a lot for stuff, and if corporate greed is still there, you know what I mean? Like, dude, that's what it is. But I mean, for real, you're going to tell me like 250 is what we get when we get the case resolution action? Jerome Powell, we knew he was going to be stingy. And he even seems like he's not interested anymore. I don't know about you, but watching that it just was, I don't know, it just seemed he lacked something. In previous meetings, you really saw him get like fiery and do stuff. You know what I'm saying? Like you would see this like this thing from Jerome, this oomph, and you didn't see that this time. You're just like, oh, this is kind of stupid. And to be honest with you, I think Jerome's time is done. I think he's an ineffective Fed head. I think that he was late when it came to the party of raising rates. Do you remember when all of us were sitting there after the Rona, the pandemico? Remember when all that was happening? And we were all like, yo, this is getting expensive, G. People are raising prices. You need to start doing something with rates. And they were like, no, we're good. And we're like, yo, our groceries are going up. Rent is going, everything is freaking going up. And the Fed's like, nah, man, we're good. You need to chill the fuck out, SA. You need to pay those high prices. And then all of a sudden the Fed did what? A 75 raise, a 75 raise, and another 75 raise. 3 times in a row. The highest we have ever seen in 44 years, I think is what it is. 44, 43 years, something like that. Like, that's telling us that you were behind. You were a laggard effect as well in the market. And so Jerome Powell, that's just shit. And Sparkwater, channel member, thank you very much for running the channel, says, too much power for that position. I agree. Miriam says he's borderline monotone. Yeah, he just seemed like just not interested today. And the thing was, he was late to the party raising rates when we were dealing with inflation. He's late to the party when it came to cutting rates. And now he's sitting here going, well, you know, tariffs. Fucker, tariffs haven't even kicked in yet. Sorry for the language if you got kids watching. My bad on that, but there's a warning at the beginning of my video. It's not the live stream, so my bad on that. But like for real, dude, you're late to the party. And what's happening is U.S. money is expensive. Growth in the U.S. is expensive. So if growth in the U.S. is expensive, where do companies go? They go to where it's cheap, Klaus. Yeah, exactly. International capital. When people want to invest internationally, they look where rates are favorable for them. They look where things are favorable, where growth is favorable, where expenses are favorable. It just, he's ineffective. Did someone just say Jerome Powell has tardive dyskinesia? Yeah, hopefully I'm saying that right. Maybe the tongue ring is messing it up. This was Jerome Powell, I think, maybe saying he's mailing it in. Maybe he's done. Maybe he's like, look, get a new Fed head. Like, once you find something, I'm out, but I'll stay here until then. Maybe that's the conversation that's already happened. Maybe that's the real big story out of all this, is he just seemed like he didn't give a shit. Remember before when we would do these things, he would have this fire, this passion? Yeah, he didn't have any of that today. Even if it was to rub crap in our face, he didn't have that. Tyler dropping support on the channel. Everyone give Tyler a big thank you. Tyler says, Klaus, hold on, got to get to it. We're here at 50 cents. It's still $2.50. I do agree with that. Just think they could have lost the case. They could have delayed 2 more years. I'm happy it's over. No, Tyler, you're right, dude. You're right. I think the issue that I'm having, Tyler, is that the timing of it just sucked, man. What if we would have gotten the case news done in February. Right? Could you imagine that? All that at the same time? But we get it in March. And you're right. Getting it is better than not getting it. Okay? I don't know about some of you. Maybe you're not getting it. Maybe that's why you don't feel good. I don't know. But you're right. I'm glad that the case thing is near its end term. I'm happy with that. Regs are going to come in, and that's going to be cool. Regs are going to be something I really look forward to. Regs, by the way, for those of you that are not subscribed to the channel, if you subscribe and hit the notification bell, that'd be a smart thing to do. Because when they start doing the congressional sessions and the votings and the hearings regarding crypto regulations and stuff like that, I'm going to be live streaming those too. So that way you won't miss out. His antipsychotic dose is too high. Just in, Jerome Powell on too many ladders. No emotion at the meeting. Yeah, I mean, we saw plenty of, like, oomph from him. And, like, what's so messed up about this is, like, even when Jerome Powell, like, agrees or disagrees with you, you do see this, like, kind of, this energy, this something. Like, you can tell he cares about his job. Today, it just seemed like, yo, I am done. I am mailing it in, cashing the check, bend you over, check it. I mean, it's just, I kind of wonder if what we're going to see here in the next several months is a new Fed head. I really wonder if that's what's going to happen. Because even in this, he was like patting his back like, well, we're doing good with quantitative easing. We're doing good with pay rates right now. It's like, dude, come on, dude. Come on. And so essentially what's happening is Jerome is like, yo, we're gonna pause for a while. We're gonna pause for a while. He did say, for those of you that were listening, he did say that there were going to be 2 rate cuts this year. I think that's good. The market would have been deep in the red if he would have said only 1. So we did get that. That's one of the good things that happened. Tyler says, yeah, plus it gave legal clarity for the rest of the crypto market, and Ripple's legal team will be there to support others. Agreed. As much as you don't want to admit it, or whatever, however you want to put it, Ripple was the shield to the crypto verse. And them as a company. I'm not talking about XRP, the crypto. I'm talking about Ripple as a company was a shield for the entire crypto market. TP does mean toilet paper. It does. I don't know. I'm just, the volume bothers me a little bit. The lack of new liquidity has been a big problem. The lack of innovation's a problem. This right here, inflation being higher for longer, is a problem. I mean, we got a lot of stuff going on, and we need these regs to come in because, honestly, big bank money, big institution money from the sidelines can come in and fix all this. But that big money said they're not going to touch it until we get those regs. Because the reason, okay, for those of you out there, here's why players want regs, okay? The reason big players on the sidelines are not putting big money into crypto right now is because there's no regs. So essentially what they're saying is that a next president, the next regime could come in, do executive orders, and undo a whole bunch of this stuff. Once you get regs, that goes through Congress. To undo an act of Congress, to like repeal it, to put in a new verbiage for it, that is really tough to do. That's really tough to break. That's a good way to put it. So the reason these players are sitting on the sidelines is because right now, we're living on executive orders, where regulations would be way, way more concrete. That's why the big players are waiting on the sidelines. That's why you hit the subscribe button, notification bell, because even late in these streams, I drop you with juicy gems like that so that you better understand the market, so you can understand why players aren't getting in. Adam, One Stop Fish Shop. Man, I want to go fishing, dude. I haven't fished in a while. Yep, we needed the regs like yesterday. We did. We did. We and the thing is the regs are just, okay, here's word on the street right now, okay? Word on the street right now is that stables are pretty much a done deal. They got all the votes in the world they'll need. They'll be good to push stables. Regs regarding the rest of crypto, so far from word, they don't have enough votes to get it through. And right now, you're not in the position to add pork to these bills to make it happen. So they're almost thinking, well, hey, wait a minute, do we make a separate bill for that and piggyback it on something else? That's not freaking good, man. That is not freaking good at all. So I'm sitting here thinking, I hope I'm not sitting here talking to you guys in 2026 and gals and giraffes if you identify that way. I hope it's not 2026 and all of a sudden I'm still sitting here talking to you about hoping we get regs soon. That would be a complete disaster. Sparkwater says stables should have been easy and done a long time ago. I agree. Do you know that stables... Okay, do you remember when we were watching all the congressional hearings early on and they were talking about how, like, stable coins and all that was a threat to the U.S. dollar? No, girlfriend. Stable coins are great. It shows people another way to get into the U.S. dollar because when you have your stabes, you got to have backup within the U.S. dollar denomination goodies, short-term securities, treasuries, stuff like that. So, come on. Stables? Yeah, we should have gotten stables done a long time ago. Taylor Bankson says, I don't know why they won't get the votes. Taylor, the reason is this, is there's a lot of people that are cool with, like, how do I put this? There's a lot of people that are cool with crypto where it is right now. In terms of, hey, you got BTC as like a digital gold, like a store of value only play, all right? And then you got like the rest of this market. And a lot of players out there are like, ooh, do we really want to look at the rest of this market as a commodity? Or should we look at it as something completely different? Because the reality is what do you then do with the meme coins? Are you going to tell me meme coins are commodities too? They just said meme coins aren't going to be a security. Mark Ueda came out with that. He's the current head of the SEC until the other guy comes in. So Ueda comes out and he's like, yeah, meme, I don't think that's going to be a security. So you got players out there going, okay, well, we can't just stuff them all into commodities because meme coins aren't commodities. Justice for All says, I identify as a fanboy. Well done, I like it. So, I mean, where does this put us? I mean, Dave Trader says yes, because of the strong bank lobbying. Yeah, totally true, man. The bank lobbying power is still there. That's why when the whole Deaton Warren thing happened, I think they should have put Deaton up against someone else. Someone that they had a chance. To go against Warren was a waste of money, was a waste of votes, was a waste of time, and was a whole bunch of bullshit hopium out there. Oh, and by the way, no one took me up on my vote bet for saying that Deaton would lose. Not one creator contacted me. And my email is out there in the world. And I said, no way. NSSK Roclaw says, will you ever do OnlyFans and for how much? I don't know. What would I do well, if I did OnlyFans, it would be really naughty. Like, I know my content now gets sometimes a little spicy. I think it'd be pretty bad. I can get kind of vulgar, but it's much more just the darkness, the harshness of my humor, I think, that could get to people. Rather than like the language. It's maybe more contextually dark. Tyler Etcher says, we need memes as securities and just cut off the memes. Do you know how much extra money we'd have if meme didn't exist? But that's the other thing. Is as meme stuff happens, what about as Pi Network happens? That sucks some capital out. It's new. HBAR sucks some capital from XRP. XRP sucks capital from BTC. Doge sucks some capital from X. Like, you see what I mean? Like, as these cryptos come in, it just starts watering down the money. Look at this. Look at this up on the top left of the screen. Current cryptos right now, 12.9 million. When I started this channel, there were I think 11,000 cryptos. Put that into perspective. There are now over 12 million cryptos. So I'm looking at this and I'm going, everything that comes out new does suck money up from the market. Just to get back to the meme thing, and there's nothing wrong with meme. I know a lot of y'all out there are into meme. I have nothing wrong with meme. But my point with the meme is is meme was cool, and then all of a sudden PayPay came in. And then PayPay took a bite out of SHIB and Doge. Like, you see what I'm saying? And then Dog with Hat comes into the play, and then Dog with Hat takes a bite out of that. And you see what I mean? It's nuts, man. And Tyler, I'm telling you, man, when I was doing the channel, like, early on, we were at like 10, 11,000 cryptos up here. And the exchanges, you know, like, the exchanges are making crazy money on this. Simone says, I don't know, I like the idea of a free market in regards to meme. Encourages people to engage in the crypto world. No, I'm with you on that, but that's my whole thing. I don't think meme is a security either. I mean, meme can function so many different ways. Meme can be used as an engagement tool. Meme can also be used as a total degen gambling tool. Like, you see what I'm saying? There's so many layers to this, and that's why the regs are going to be that much harder, because when they start having these honest conversations about this crypto, this, and how we're all going to lump them in together, they're going to be like, yo, we can't lump them all together. I don't know. I don't know. Maybe I'm having an emotional crisis right now. I'm happy that I got to report to you the news today earlier about Brad Garlinghouse. I think that was jumblies in the face. Jumblies, right? That'd be freaking cool. But I'm not happy that Jerome Powell said, yo, we're going to sit on the fence. So, you know, take the good with the bad. Oh, Mitch says, if you ever come up to Minnesota, look me up. We'll go muskie fishing. I used to work very close up there. I used to have to go to Minneapolis quite often, and I did. I spent quite a bit of time in Minnesota. I've actually fished in Minnesota quite a bit too. I like way north in Minnesota. So I used to be an Upper Midwest guy, by the way. What's in the drink says meme should be regarded as artwork. Yeah, like, you see what I'm saying? Like, artwork and meme are much closer to each other than meme and stock. Right? Because that's what your securities are. So, yeah. I'm totally with you on that. With you're right. You're right. Art and meme, a lot closer together. Well done. Where's in the drinks? Or what's in the drinks? Well freaking done. So, yeah, like, how do we classify these? And how do we classify them when there's 12.9 million of them? They're so freaking different, man. And chicks, they're so different. Trinity says, if you ever come to Tennessee, we can play darts. I'm top 10 in the USA. Well, if you ever come down to the South, you could run a real long race with me and regret it for days and days and days later. Oh, Justice for All says, Klaus, after today, it sounds like you need another month in Guatemala. You know what? I might just take another month off and go on vacation. Dude, I want to, man. Oh, Doran Butler's hanging in the house. Well done. What's up, Doran? How you doing? I do like Justice for All's comment. I like Justice for All's comment so much that I'm pinning it. I think it's time. I think it's time for me to spend some time in Guatemala again. It was freaking awesome, by the way. Guatemala was freaking nice, dude. I loved it. Loved it. I think I would maybe do a different building, but in the same section, because my building was super close to Avenida 7. And that's very loud. Like, maybe in building like a block or two further back. But, yeah, the mountains are nice in the summer, too. Very true, sir. You know, and with the Fed, remember, the Fed did say something pretty good. Jerome Powell did say something pretty good. He says a lot of the inflation that you're seeing right now is also corporate greed. They're passing it on to the consumer. Let's do this. You got questions, you got comments, drop them now. Let's take questions for the next couple minutes, and we'll see if we can keep the stream going. Let me know what your thoughts are. So if you got questions, do that. I'm going to get a drink right now. Triple berry. I'm hydrating. As you see, I got my headband on. I got to do a little bit of work after this. I'm going to do some mobility work, some range of motion stuff, but let me take a quick drink. Oh, that is freaking disgusting. Oh, that is probably my least favorite. Justice for All says Guatemala is beautiful. I would go there again anytime. Dude, Guatemala was freaking beautiful. I would seriously stay in Zone 4 again, too. Zone 4 was absolutely freaking perfect. Beachhead Fred says, I don't think the case is officially dropped until a vote through the SEC Commission. That's what's said during Brad's announcement. Yeah, and the whole thing is they're going to vote for it. Just so you know, the SEC Commission right now is now mostly pro-crypto. So it'll get voted through. I'm not even worried about that. Trick says, later, Klaus, thanks for the live. Well, Trick, that's because you got to go back to heaven, my guy. Dude, enjoy the time out there. And tell the kids thank you. I'm sure you did. Thank you, Trick, by the way, for joining the channel. Klaus, have you ever been to Belize? No, I have not. I have not. And I got to tell you, though, staying in Guatemala City, in the city, was awesome. Klaus, tell them all to regulate these nuts. Like it. Did you ever do P90X back in the day? No, I was not a P90X fan. I was a big bodybuilding guy, by the way. Now I like to run because, like, all my other, like, my shoulders are not the best. Just saying. Will stables make XRP price go up? No. No. Think of Tether and think of the stablecoin market cap has not done anything for cryptos. Now, that being said, stablecoins are being built up on the sidelines. That we've seen. So these players can get in real easy. Real easy. Oh, a slab that represents Powell. No, I looked it up, Krishna. I swear to God. While I was on the stream, I have my other monitor right over here, like it's on this side. I have my main one here, other one here, and I got the one right here. While I was on this one, and this is where I do, like, hang out with chat. So I'm sitting here. As I was doing that, right, I was looking up Jerome Powell PSA 10 stuff, and there's actually stuff out there on eBay. Just throwing it out there. Adam One Stop Fishing Shop says, how are the knees after running a race? My knees are totally fine. My knees, I actually jacked up my Achilles. I did. I actually hurt my Achilles this last race. It was not fun at all. Bailey Deepman says, where do you get your PSA 10s? Pretty much everywhere. Card shows, auctions, eBay, shops if I find good deals, conventions if you find a good deal. Pretty much anywhere. And what I do is I try to find, like, what they most recently sold for, and I try to usually be like 15 to 20% under that. I feel like Goomba would be a perfect match. Ooh. I have a Goomba I have a Goomba Shoe PSA 10 Mario Kart card, by the way. Do you remember Hydroxycut, the original? Yes, I do. I totally remember all that stuff. And I remember it used to have something in there that you can't have anymore. I told Trick what it was. What the hell was it called? Oh man, I'm trying to think. It was a stimulant that ephedra. Ephedra. Yeah, it used to have ephedra in the original stuff. Just throwing it in there. Big burgers today. I mean, they're burgers, you know what I mean? They're burgers. It's just the inflation thing is tough, dude. Powell, as much as he's an ass, he's right. If inflation stays high for a while, this just isn't going to be fun. Let's see. What else do we got for today? Are you a Jumblies or a booty guy? I honestly like booty more than Jumblies, but I'm starting to grow into the Jumblies aspect of my life. Like, as I'm maturing as a man, I'm starting to pay attention to booty and Jumblies, where I was a big booty guy before. Like, I was an exclusive booty guy. Just throwing it out there. But to be honest with you, booties and Jumblies mean nothing if homegirl ain't got a personality or a brain. Like, for real. Like, you gotta have something upstairs here, or else what else you have is worthless. Like, I would rather, like, date an intellectually hot chick that, like, is like a 5, 6, 7 than a chick that's like an 8, 9, or a 10, but intellectually she's like a 2. Just throwing it out there. Midlife crisis. Maybe it's a midlife crisis. I don't know. Maybe it is. Yeah, if you got questions, throw them out, man. We're man and chicks and giraffes. We're having just a cool chat session right now. We can talk crypto. We could talk markets. Yeah, dude, you got to have something upstairs. You can't just have the bod, man. You can't. Hot dog in a hallway. No, we don't want hot dogs in a hallways. No, we don't. No, we don't. By the way, is everyone kind of like let down a little bit in terms of what we got XRP price-wise on the announcement from Brad. Does that kind of, are you, I mean, is this doing it for you? Like, I want to know how you feel. Like, no, let me know how you feel. Because I've told you, I'm like, oh, this kind of sucks ass. I want to know, how do you feel? Let's see. I'm just looking at it. Doran Butler says, jackpot. I hit the wife jackpot. 100% all in on wanting to be my wife. Well done, Doran. Yeah, chicks got to have stuff upstairs as well as downstairs. Totally, man. Totally how it goes. Yeah, I mean, good point, Alcoholic Click. The case is done, but weren't you hoping for more price than this? Dude, I do remember Xenadrin. It was the blue bottle with the blue pills, dude. Come on now. I used to do, like, hardcore bodybuilding. Like it would scare the shit out of all y'all. Like, I used to do, like, hardcore stuff. Like, hardcore stuff. Let's see, what else do we got? And by the way, you got any questions, comments, are you on a 4-year cycle, Maxi, and is it over in your opinion? I don't think it's a time thing at all. I think that there's so many dynamics in the world, and with everyone having the internet, I think these moves become faster and faster because more people are connected to instantaneous news. So I don't see it as a 4-year cycle thing. I see this more and more as the globe is so interconnected that when we have problems, the ripples are felt everywhere, and they're felt everywhere fast and for a long time. I mean, did you seriously think this many years after the Rona that we would be sitting here still worried about inflation stuff? Like, you know what I'm saying? I didn't think so. Let me get a drink. If y'all need a drink, now's the time. Wet the whistle. Beachhead Fred says, I just find it weird that the case being dropped was announced on the same day as the JP rate announcement. Agreed with that. And I'm surprised, okay? I'm surprised Brad did it without it being official. Everything up until now, Brad has been like, yo, it's official, I comment on it. He did this first. That surprises me. Do you think they'll give out stimulus checks like the COVID times? With the Doge thing, it really sounds like they are. And let's be honest here, there's plenty of waste in the government, so yeah, I really think we could get a stimulus check. And I wouldn't call it a stimulus check, I'd call it a Doge refund check. Too broke to travel, too tired to work, too ugly for OnlyFans. That's not good. Not good at all. Richard White says, keep up the good work, Klaus, giving us that info. Yeah, I try to get out the info as fast as I could. In fact, one of the comments that someone shared to me was, dude, you were the first one that broke the story with Garlinghouse this morning. I had a video out within, I think it was like 40-something minutes of the announcement from him. That's pretty freaking good. That's pretty good. Klaus, you can use my yacht anytime, but you have to row it yourself. Like it. Oh, man. I don't know, everyone. I just was hoping for more. And not crazy more, but I was thinking with the case thing that we would see something similar to like what we saw with strategic reserve news. You try to get to that $3 mark and you try to hold it. That's what my hopes really were. We got to like half of that. And you notice like the peel back of the strategic reserve news. You're seeing the peel back now from the XRP news. That's not cool. Jessica Burrow says, how many NDAs do you think Ripple has in their pocket? They probably have a whole bunch of NDAs, but like the problem is like NDAs or not, if you're working with a company, it's not affecting the price, right? ODL is not affecting the price of XRP. If they keep buying XRP over the counter and giving it to these players, you ain't seeing any benefit to that. That's why the ETFs are so good. Especially the ones that buy off the exchanges. Tyler says we need more crypto merch in the public, more advertising. Okay, so I get the opportunity to travel every so often. And I gotta be honest with you, I rarely ever see crypto merchandise. I mean, rarely ever see that kind of stuff. You always see sports stuff. You always see like states logos like, oh, Washington State. Georgia, the college stuff. But yeah, I don't really see much crypto merch. I think because a lot of it is kind of cringy looking. Like, you got to be honest with me. A lot of that shit out there is pretty cringy AF, man. Wyatt R, that is. Says, Klaus, I definitely appreciate the news, dude. Best crypto show out here. Keep doing what you do. Well, I appreciate it. I do totally appreciate it. TuneEd, it says 280 XRP by tonight. I don't think so. Daniel's got a good one. Bro, we went from 57 to 95 cents on the Torah's not security news than we did on the case. Yeah, good point there. There just seems to be just a lack of oomph right now in regards to XRP and what we got. Because think about it. This is the case telling you it's over right here on the right side of my screen. This is strategic reserve news. Yeah, this is nuts, man. Shots fired at Stock Mo with his dumb XRP cap. Yeah, like, if you're gonna wear, like, merch, it's gotta look cool. Like, you know what I'm saying? Like, you don't want it to be cringy and just lame. That's just horrible. Then you just look like a douchebag. Stephen Barrett says Brad's announcement. Strategic timing, lack of detail, $125 million fine, bad actor judgment. How was this resolved? Did Brad just pump and dump us his line in his friend's pockets? I hope not. If it comes out that the case was not resolved, Brad loses all credibility and, oh man, we will freak out. I don't know. I just thought more action was going to happen. I mean, the volume's cool. You know, when you look at XRP volume, it's up 158%. Rest of the market's volume is up 16%. So that's good. I mean, it's cool to see XRP moving on that, but not good. All right, we are sitting right now at 3:54. We're going to end the stream at 4 p.m. Eastern time. If you got questions, comments, get them in now. I'm going to put this down in the chat. 4 p.m. Eastern time. Stream is over. There we go. So if you got questions, hot, spicy takes, naughty comments, now's the time to put them in the chat. BG House says any other token would be 500% on that sort of news. Yeah, I mean, I would like to think that, like, if Library was able to get a thing like that, that Library would have totally pumped on that news. Yeah, well done. Well, good comment on there, BG House. I think that's a really good comment. Renee says, still so much more coming, Klaus. Keep up the hope. 1,700 NDAs according to the court case. 18 ETFs. Of those 18 ETFs, I've confirmed 3 that are buying from the reserves. Just throwing that out there. Simone says, thanks for everything, Klaus. I'll see you later. Thanks, homegirl, for swinging by. I appreciate it. And Simone, like I said, you are always welcome here because your comments are freaking fire AF. You seriously have a really good, like, you pick shit up really well. So kudos to you, Simone. Seriously. I'll be a millionaire at $600 XRP. Like, yeah, but how are you going to get $600 XRP if we can't even, like, hold $3? This is a little P day. Not P Diddy day, a little P day, a little pumperoni. You know, like when you get the pizza and it's got, like, the little sausage thingies on there, not like the nice big pepperonis? Well done, Gino's best. I love that one. Which gel seat on the Trek? I actually hurt my spine when I was in a motorcycle accident a while ago. So I actually have an integrated suspension gel seat on my bike, and I use it for when I race. That is the only thing that works because my tailbone, it gets really, really bad pain. Really, really bad pain. Hi, sweetie. Sorry, my dog's in here. BG House says, so Klaus, what do you think? Manipulation or just lack of enthusiasm? It's gone on far too long. I think retail's lost interest. Yeah, it's not hot, spicy, naughty, or it is relevant. Is it hot? I don't know. I mean, like, you know what I'm saying? Is it like juicy big news? No. Like, I mean, it's big news. It's juicy, but it's not juicy big price action news. Like, you know what I'm saying? Justice for All says best wishes for your Achilles. Yeah, I'm definitely gonna be okay. I got hurt fairly early in the race, and I had to run a good chunk, and my Achilles just gave out. Like, literally gave out. Like I could not go uphill at all. It sucked. Gotta come live more often, sir. Thank you for your time. That's from Steven. Yeah, I try to do lives when there's big news out there so that we got something to focus on. I don't always, and this goes, there's a reason why I don't put my face in thumbnails. Because I'm not the fucking important thing. The important thing is the content, the news, the juice, the topics, right? And so that's why, like, I try to do lives like the same thing. I try to do lives around a news thing, so it's not just me being the center, because, like, I don't have an ego like that. I am not the most important thing. The most important thing here is you, the viewer. Seriously. You, the viewer, are the most important thing. So, no thumbnails with my faces in it, no melting faces stuff. And when I do lives, I try to do them anchored around news so that, like, I'm not the center. And this is just how I feel about it. Stefan says, thanks, brother, for all your work. We will witness a decline in crypto. Will we witness a decline in crypto prices? If we don't get something good coming out soon, I don't know what's going to hold us up anymore. Adam One Stop Fish Shop says, see, that's why I watch you, not a fake hype man. Well, I appreciate that. Krishna says, thank you for not using your face with the stupid emotion as a thumbnail. It is totally cringy AF. Jason says, I appreciate your character. I thank you. I appreciate that. Silly Sam says, hey, Klaus, did you at least finish the race? So I timed out. I actually could not physically finish the 37th lap, I think it was. I think it was 36 or 37. I physically could not move. So the race was a 15-minute format. You had to complete one lap in 15 minutes, okay? And I was doing good. Seriously, my heart rate was not going over 135. I was eating, like, all the time. I was joking around. I mean, like, I was like a metronome. Every lap, I was within, like, 10, 15 seconds. Like, every lap, like a metronome, man. And I was doing good. The heat wasn't bothering me. My body felt great. And then all of a sudden, it was like I think it was lap 28. Something happened in my ankle, like my Achilles, and it started burning, like, real quick. So I finished that lap, did a little bit of massage gun with the little bit of time I had left. And then I went out for another one. And I was like, yo, this does not feel good. Partway through my lap, I stopped. I stretched out my leg against a tree a little bit. You know, did the standing, like, calf Achilles stretch type thing. Looked at my watch, was like, yo, you better stop stretching. You need to finish your lap, because I needed to get some more water and to get some food in me. So I finished that lap. For the next, like, 6-7 miles or laps, I basically tried to run differently. I tried to run faster. I tried to run using a different cadence, a different form, anything I could do to get all the pressure off my Achilles. And then what ended up happening, because I was running differently, the compensation went into my hip, and I physically could not, I had no forward push. Like, my left leg would push me, but then my right leg would just kind of be like a dud that I dragged through. And there was a real steep uphill section where we would all walk that steep section. It was so painful for me to walk. It was rough. I physically could not finish a lap in time, and so I timed out, unfortunately. So, and not upset about it at all. Seriously, like, not upset about it at all. This has actually been the first race I've had an injury in a race. That stopped me. This is the first one. And here's the funny part. I already was running yesterday, so I'm already kind of getting back into it. See? I'm getting there. You should go to the Netherlands for your bike races. Flat as hell. Oh, I live in the foothills. It is nuts, man. We have tons and tons of hills out here. I agree. We need a melting faces thumbnail for the Vine. Oh, God. All right. I'll think about it. I'll think about doing something really, really cringy. Really, really cringy. And everyone in chat will know exactly what we're talking about. There'll be 478 of you that are going to know why I'm going to do a real cringy thumbnail on a video. I'll think about it. It's pretty cool. All right, everyone, here's what I'm going to do. I'm going to put some music up on the screen. I'm going to hang out with chat for a little bit, and then that way I'll chat with you guys. But until then, of course, what's the word, bird? You know the word, bird. It is chew, chew, bitches.
Gently wind around. You're some kind of butterfly. Baby, you give me midnight. You whip up my appetite. Don't leave me here high and dry. Baby, you give me ice and fire. You're channeling wind and rain. You're some kind of butterfly. Baby, you give me midnight. You whip up my appetite. Don't leave me here high and dry. Oh, 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 baby, you give me ice and fire. You're giving me wind and rain. You're some kind of butterfly. Baby, you give me midnight. You whip up my appetite. Don't leave me here high and dry.